Hey guys, Bill here, and in this video we're going to talk about the Fibonacci retracement tool. What is it? Why is it useful? How do you use it? Basically, it's just going to be an overview video about the basics, and then in subsequent videos I'll get into more detail about different ways to use them in plays, different time frames, things like this. And you're always welcome to leave a comment or hit me up in the Discord to maybe give me some ideas of things you'd want me to talk about or learn more about or anything like that, or any questions you have about this video. But basically, what are Fibonacci retracements? Okay, so in finance, a Fibonacci retracement is a method of technical analysis for basically determining support and resistance levels. Okay, it's named after the Fibonacci sequence of numbers, which ratios provide price levels to which markets tend to retrace a portion of the move before then continuing on in the original direction of the trend. All right, and why are they useful? Well, the algos we always talk about, right? That move the market, they rely heavily on Fibonacci sequence. And it's beneficial to be in sync with those algos to improve the quality of our entries and boost our win rate. Furthermore, the efficiency of your prep will greatly increase when you start to incorporate Fibonacci. I used to spend countless hours constantly updating my charts with levels, every time a new daily candle closed, and the weekly and the monthly. I had to go and update and draw new lines, and then I'd have way too many lines. I'd be deleting stuff, and it became all this housekeeping that was keeping me from spending my time in a way that was more conducive to finding good plays and things like this. So once I started using fibs as 90% of my key levels, I was finding plays, better plays. I was spending way less time on prep, and just, being more efficient, okay? So how do you use Fibonacci retracements? Well, kind of like I touched on earlier, the key way you use them is to find great entries for a play that's continuing in a trend. So if you're looking for calls, you want to find a pullback at a level that's going to give you good risk reward to make a bigger move up. All right, so you're getting cheaper contracts and you have better risk reward because you can set a stop loss really close to this entry, knowing that the majority of the time your entry is going to hold here and you're not going to continue down. All right, so the first step of this process is drawing the fibs, right? And this is where a lot of people get confused. Where do I draw them? How do I draw them? Well, basically you're going to want to be drawing them in trends. Okay, so let's see here. I'm going to pull, this is SPY obviously, and it's already a mess with all my levels on it, but let me pull up a chart that I've never charted before. I saw D Book mention he had eyes on Starbucks, and I've never traded Starbucks. So let's pull up Starbucks, and I'm going to kind of break this down and draw the fibs from scratch how I would and kind of explain why I do it like I do it, all right? The first thing I'm going to want to make sure I do, and I start on the daily level. I think that's just the best time frame to do these on. And I'm going to look to draw at least one fib that covers a downtrend and one that covers an uptrend, okay? So here we see, I think this is the all-time high of Starbucks, 123.09, and then we have this, recent low at a real nice psych of 68, round number. A lot of people are going to see this and they're going to say, okay, well, I'm going to draw from here down to here. This is the downtrend. Here's why I don't agree with that and wouldn't do it that way. Technically, a downtrend needs to be putting in lower lows and lower highs on each leg, all right? And if we look here, we've got leg 1, leg 2, all good there, leg 3, all good there. Then we start to chop. It gets a little weird. We kind of gap down, and then we bounce back up. And right here, we're making a higher low, okay? Or I'm sorry, we're not making a lower high, okay? This is higher than this area here. And then also on this leg down, we're not making a lower low. We're not getting below here. And then we're making another, it's a little bit higher here, and again, all right? So this is not a downtrend, all right? Now, however, from here down to here is a downtrend. This is kind of one huge long leg all the way down to here. we bounce up a little bit, lower high, another huge move down, bounce up, but it's still a lower high, and then all the way down to 68, all right? This is where I would mark my downtrend. And when you're drawing fibs, if it's a downtrend, you draw from the top of the trend down to the bottom. And Webull tries to snap these things, but it doesn't always snap them perfect, so I usually have to kind of go in, make sure that the numbers are actually right, okay? And then I lock it. In my system, for like color coding and stuff, you can try to incorporate it if you want, it doesn't really matter. But what I do is, if it's a longer term, like this is a pretty long term, I make it thicker. And on a shorter term, I make it thinner. And it's just a quick way for me to, to remember which ones are stronger, because the longer time frame, just like support and resistance that you hand draw, the longer they hold up, like a monthly level should be stronger than a daily level, right? So on fibs, it's the same way. If your fib is incorporating a year's worth of data, those levels should be stronger than a couple weeks, all right? Now, I also want to have at least one uptrend, okay? Because like we said, these levels can be support or resistance in either direction, but they're targeting, on this downtrend, you're targeting a place to enter puts for more room down, right? So maybe, you would enter here at this 50 level because that's going to be good support for puts, and then look, you get the move all the way down. But we need to find an uptrend now, okay? So we're looking down here. We're at the 68. This is a good starting point. A lot of people would say, okay, well, here's our kind of local high. I'm going to draw from 68 to here. Again, is it a true uptrend, all right? Leg 1 up, leg 2 down, leg 3 up. It's not a higher high. It's close, and people could maybe say I'm quibbling a bit, but I would feel safer about drawing from here up to here, where it's a true uptrend the entire way. So that's what I'm going to do. And this is going to be my uptrend. I got to make sure that Webull is not messing with my numbers here. And there we go. We got an uptrend. Lock it. All right, so now you've got your fibs drawn, and how do you use them most effectively? Okay, well, there's an area in the Fibonacci sequence called the golden zone. It is the 50 fib through the 786, all right? This area is considered to be the part of the sequence that's going to be most likely to yield a reversal in your direction. So in this uptrend, we would be looking to enter calls somewhere in the golden zone. And now this is a part where it gets a little subjective. There's different ways to play it. You could wait all the way till the 786, and if it never comes, never enter in. Or you could start scaling in at the 50, small position, and just, if it gets to the middle, the 618, maybe you add a little bit more to your position, and so on. Kind of like Shoei was talking about with his zones that he draws for those earnings plays entries. You can kind of approach it like that. I tend to like to see if we can get right in the middle to the 618, and then I enter half to 3/4 size, and if we keep dipping, I'll add a little more here. The great thing is, you would play this with the 786 as your stop loss. So a close under here would invalidate the reversal attempt. So that's why I like to get most of my contracts bought closer to the 786 as possible. But you're not always going to get a test of this. So that's why it can be beneficial to enter a little earlier and kind of scale on the way down. And then here's your stop loss. So that's good risk reward, right? I mean, you get stopped out here, but there's a potential for this reversal and new highs on the move. So that's how we're using the golden zone. And I've found, as far as like when I enter, or if I'm just using it as like resistance or support, like for breakout trading, I like to use 15 minutes as confirmation above. Oftentimes you'll get a retest, just like playing, hourly levels, daily levels, anything like that. And that's really the basics of how I use the fibs, and they can be drawn at any time frame. I start with the daily, But these are things you can apply to intraday moves if you're just looking to scalp or just get in a good position on a pullback intraday. You can draw them like that, and I can make videos about how I'd maybe use them with SPY or something, or whatever you guys are interested in. Just leave a comment or let me know in the Discord if you have any questions or what you'd like to see in videos in the future. All right, guys, thanks.